that somebody would want to invest in. And I'm also here to tell you that everything you learned in business school was wrong, all right? It's all wrong, and I'm here to tell you why. So I'm coming at this goal of ours, which is to raise funds for our projects. I'm coming at this as an investor myself, but also as somebody who, over 15 years, I did due diligence on projects, first as a capital markets lawyer, and then later as a private equity and M&A lawyer. So, you know, all about funds raising, all about trying to figure out what is the secret sauce that will make our investee company a success. And let me tell you what that secret sauce is. That secret sauce, we've learned over the years, is evidence that these people can execute. That's it. That's the answer. That's 20 minutes. Okay, we can all go for lunch now, all right? I need you to be able to prove that you can execute on all these things that you're promising me as an investor. But, you know, if I just walk up, I pretend I'm the project, and I just walk up to an investor and I say, hey, my name's Erica, I can execute. The investor's not going to believe me, all right? So today I want to suggest there are 6 different things that you can try where you show that you can execute. You're not telling that you can execute. You show that you can execute. And so to start off, just before I begin, I do want to remind, I guess there's hardly anybody in here who needs to hear this, but just in case, be very careful about taking money from investors. Again, I'm speaking to you as an investor. You want to choose your investors very carefully. And so part of what I'm telling you today, you can think of it as how do I groom myself to become better looking for investors, but also the way the investor reacts to what you tell them or give them will show you whether or not that investor is sophisticated, strategic, or just going to be a pain in the butt. Because the one thing you do not want to do is take money from people who are going to cause you trouble and stop you from executing. Okay, that you have to avoid that. So I just wanted to start out by saying be careful with your investors. I know all of you are just like, oh, I just want money, I'll take whatever dollar comes. No, don't do that. Be very careful with who you take money from. So, all right, just to get started, what most people think makes a good project is a good idea and maybe a good business plan. Maybe if people are doing really well, there's some good budgets, there's some cap tables, maybe. And I'm here to tell you, again, as an investor, that's not true. What I want to see, and the first thing that is going to be able to show that you can execute, is I want to see all the things that are unfortunately covered by the chairs, okay? I want you to have a beautiful 2-page flyer. It has to be beautiful, guys. I'll explain why in a minute. A marketing deck, no, it cannot be 80 pages. It also has to be beautiful, and it has to be short, sharp, and succinct. You have to have a term sheet that already goes through all the issues you think that the investor wants to hear, okay? You need your draft documents. Oh yes, you need your draft documents. If you're raising money for a fund, you need your subscription doc. You need your shareholders agreement or LPA or LLCOA or whatever the heck it is. If you're raising for a project, you need your shareholders agreement. You need your draft documents. It'd be great if you had a website and a logo. Now, what am I talking about here? Is the content of all that stuff really all that important? No, because the term sheet is going to change. As you go out and reach out to different investors, you're going to find that they have different requirements. And maybe you settle on 4 or 5 investors that you really like, and they have a different concept of what terms will be good for them. Okay, so all this is going to change. Don't worry about it. Just because you have it, it's going to say draft in big letters all over it. But the fact that you actually have these things, what does it mean? It means you've been here before. Okay, it means you're not some idiot you're not some completely newbie who hasn't Googled the basics. You're not somebody who hasn't, even heard of investment before. You're somebody who's been through this rodeo, as we like to say. Okay, so that's my first tip, is get your documents ready. And, oh my God, you know what else it shows if you have a beautiful 2-pager and a 20-page succinct, gorgeous deck? It means you spent money and effort. It means you spent money and effort on this idea already. before you even came to me, which means you already know how to execute. All right? You coming to me with a great business idea, awesome business idea, versus this other person coming to me with a, okay, pretty boring, but okay business idea, but they have all these documents, they're already executing. I'm giving them money, not the guy who's dreaming in dreamland and has nothing to show for it. Okay, so that's the first thing. Don't think of these documents as, oh, we need a perfect shareholders agreement. No, you just need a shareholders agreement. We'll change it later, don't worry. Okay, but you need to have that there in place. This is a theme that you're going to hear about a lot. Wait, did I skip something? Yeah, no. All right. So one of the things that investors are going to do to you, notice my language. They're not doing it on you, they're doing it to you, because it can be quite brutal. It's called due diligence. And the thing about due diligence is, once again, they've heard your pitch. They've heard your good idea. They already know whether it's a good idea or not, or they're already excited or not. Now they want to do due diligence on you in order to see, obviously, if you can do what you say you're going to do. Now here's the thing. The biggest mistake my investee companies do, or the companies that I see trying to raise money, is they don't have anything ready. Okay? They don't really know the operational aspects of their business idea. And so I know we all say compliance is a bad word, but compliance is your friend. It's your biggest marketing, marketing pitch you can do, is to stand up in front of an investor and speak beautifully about compliance. They ask you a question, what kind of license do you need? I know what kind of license I need. Let me tell you. Let me give you all the different letters of the alphabet. FinTech, FinTrack. I know the difference between those. All right, fine. MSB, MBO. Just throw letters at them, and you know what you're talking about, and you know how difficult it's going to be to get the license for your project, or you know how to get an exemption to the license for your project. These are all things that I, as an investor, I'm going to be just overjoyed to hear that you can speak about, rather than shying away and trying to hide and saying, we're going to go to the Seychelles in order to avoid regulation altogether. Instead, you can say, actually, we're going to start in South Africa, where they have an exemption for what I'm going to do. And then that's the first 6 to 9 months in a country with an exemption. I'm going to use that exemption. I'm going to make enough money then to hire the right people that I can go then to the BVI and get their new VASP law, or I can go to the Caymans and get there, or I can go to Gibraltar and get their whatever license, et cetera, et cetera. So you have a pathway to execution. Unbelievably, so many in the crypto space just try to ignore compliance or say it's a dirty word, or we're Web3 and we don't have to think about these things. I'm not going to give you any money unless you can speak compliance. I like to say, speak compliance like it's your mother tongue, all right? Like you yourself are a lawyer or a compliance officer. All right. Another thing that investee companies do that I just can't believe is the investor who's doing due diligence on them will say, who are your top 3 suppliers? And they will know, they'll give the names, right? And then I'll say, show me the contracts. There's an NDA, it's okay. And they can't find the contracts. Because somebody on their team executed the damn contract and then gave it to the CEO by WhatsApp. The CEO doesn't remember. Was it WhatsApp? Was it Signal? Was it Telegram? Oh shit, where is that contract? Okay, 1. And 2, even if he or she did save it down to the drive, they saved it down with an unintelligible DocuSign number that nobody can figure out that that's the actual contract that we need to then show to the investor to prove that we've hired so-and-so, or that we've done the audit, or whatever it is that we're trying to prove, right? So the record-keeping part, you're looking at me like, oh, you're so boring. I'm sorry, but if you cannot respond to me within at least 12 hours to show me the documents that I want that are basic admin documents so boring that you instantly forgot they existed, but you still have some kind of way of finding out where they are now, already you're better than the other people who literally don't get back to me for weeks. They don't get back to me for weeks. I'm like, I'm not giving you money. Come on. And one thing, that I also want to mention here is, I don't know how many companies have come to me and said, I don't know, Binance, Animoca, back in the day, FTX, Alameda, they've agreed to invest in us, so you should invest in us too. And I'm like, great, awesome. Alameda used to be a good name. So, Alameda's investing in you. Oh, show me the document. Oh no, we were just out talking at a conference. If it's just oral and it is not written down, I'm sorry guys, it does not exist. It doesn't exist. That person was just trying to get an extra free drink out of you, all right? You don't even know who they were, if they were high enough at Alameda to even make that decision, okay? So, no, don't, say that you're gonna be invested by somebody without having something written down. That's, I think, very, very important. So far, we're halfway through. I've already told you, most important is to have that set of documents, and they've got to look beautiful. They show evidence that you were able to actually create something before you even came to me. That's awesome, all right? Compliance, you already know all of the answers to all of the compliance questions. I love you already. Number 3, you can answer my questions quickly, responsive, and you have evidence of everything you're saying, all right? It's the big things. Smaller things, I don't really care, but the big things, the important things that you're trying to get me to invest on, you have concrete, written evidence of it. Okay. Now, another thing that, oh my God, I could go on all day. All right, people, in order to have a crypto project, even with a DAO, I don't even believe in DAOs. I know it's horrifying. This is my second crypto winter, okay, so I'm able to say that I don't believe in DAOs. But even if it's a DAO, even if it's a foundation, whatever it is, you need to have a legal structure. Ignore Binance, even they have a legal structure, even though they're trying not to tell us about it, but we know they have an HQ. We kind of almost know where it is. But in any case, you need to have a legal structure, and that legal structure needs to be somewhere. And also an investor needs to know, what country am I investing into? And a lot of people look at me like, why? And I answer the most fearsome word in the English language, tax, guys, tax. If I'm an investor and I invest in a country that is, in one way or another hostile to my own country, then there's going to be up to 30% withholding tax. And if I ask you as an investor, hi, so where's the investee entity going to be? What's your corporate structure going to be? I need you to sit down, to smile, light up, and to have a beautiful PowerPoint that says, I'm going to put the HQ here, the investors will come in here, we'll have an IP co, we call it, intellectual property company, over in this awesome jurisdiction that gives us, only 2% tax. We're going to have the operating company where everybody's going to live. It's going to be in this country because of these reasons, blah, blah, blah. And they're going to test you on this stuff, all right? They want to know, why are you putting the company there? Oh, I live there. That's not a good answer. Okay, I live there. That's where I come from. I'm from Hong Kong. Well, that's nice, but is Hong Kong helpful in any way to your execution of your business plan? Why Hong Kong? Why Singapore? Why BVI? Why Cayman? Why? And you need to be able to come back at me and just have an explanation. Is it the right explanation? No, not necessarily. Will you change it if the investors have a great idea because they have some smart tax guy or some smart lawyer who can tell you, no, actually these days there's a whole new jurisdiction that everybody's going to because of these reasons. We would like you to change your operating company and to move everybody to Spain, then, or I guess it's Portugal, then great, you'll do that. But that's a negotiation, and it's a much more exquisite and awesome conversation to have than to ask somebody, where are you going to put your company? And they're like, it's crypto, I don't need a company. Okay, or worse, I don't know, everybody else is putting it in the BVI, so I'm putting it in the BVI. You need to have some kind of explanation. Way back when the GDPR, you can't really see it, it says privacy, learn about the GDPR and weep, change your websites now. That was because back in the day, when GDPR had just come in, one of the biggest signs for us that this company was not worth investing in was they didn't have their cookies, the cookies pop up, and they didn't have their privacy stuff in place, right when the GDPR came out new. That was clearly, again, you just don't care, and you're not paying attention to the changes in regulations, the changes in, whatever is expected of you in the world, and you're not changing your website to accommodate. So, it's just an example. So the fourth one, as I said, was understanding your jurisdiction and why you're putting your companies where you're putting them. And then the fifth one is, oh my gosh, money control. I had a client, so my company, by the way, I help projects become investor ready. So one of my clients, terrified by what had just happened with the FTX, called me up and said, hi, Erica, I just took all of our money off of Binance, which I thought at the time, and probably now, was a good idea, and I put it in my personal bank account. Oh my God. Okay, all of the investors' money is now in her personal bank account. Now she's saying, oh, I'm protecting my money. And I'm saying, okay, what corporate governance have you put in place to make sure that you didn't just run away with all the money, because every investor is now going to sue you. All right, I cannot believe you put the money in your own personal bank account. Now, I understand the impulse. I too am scared of centralized exchanges right now. I too have been burned on FTX. But putting it into my own personal bank account without some kind of control or money control or like a director's resolution, I mean, at the base, okay, is not something that I would have suggested to do. And of course now she's got two investors who are fighting with her and are no longer being helpful because they think that she needs more hand-holding than she really does. And once an investor starts trying to hand-hold you, you're pretty much sunk because they just get in the way and they don't know what they're doing. They're investors, they're good with their money, but they're not good with your business. So, whoops. Okay. So, one of the things that people say to me, Erica, I'm just a business person. I just want to do my work. I have this great idea. I just want to execute. How do I handle investors and all these questions? And I'm going to tell you something where, just a little bit of background on me. I am a professor. I'm a professor of archaeology and anthropology, but that's still a professor. And so I expect you to do some homework. And I'm sorry, but I've found over the years, and I'm old, okay, over the years, this has been the best way to help founders who otherwise are very busy, okay, but to help them get ready for investor questions. And these days, because we're doing all of our investor meetings on Zoom, so you can actually have this printed out as a book in front of you while you're sitting there with your beautiful, round, lights, etc., looking gorgeous, and they ask you a question, and you literally will open this book, and you will flip. They ask you, oh, what's your sales strategy? Floop, you turn to page 5. There are 5 bullet points in big font. Okay, we're not writing an essay here. There are 5 bullet points of what you should remember to tell the investors when they ask you about sales strategy. Or in the case of, a lot these days, cybersecurity is obviously a big issue. Obviously, regulators and licenses, et cetera, et cetera. It doesn't matter what order you put this in, but if you, as a founder, delegate, okay, just delegate if you have to. If you can do it yourself, that's the best, but you can delegate if you want. Go find somebody to fill out this book with these topics, and then, read it before the investor meeting. You already look so much better than other projects. Now, I have one here for businesses, which I'm sad that you can't really take a picture of because of the chairs. And I also have a guidebook for funds, which have a slightly different set of things that you should be ready to answer. So, that's been 20 minutes. My 20 minutes is almost up, but like I said, I have been around for a long time, obviously, and I've been trying to help companies. And these days, unfortunately, a lot of the work I'm doing is helping funds help their portfolio companies restructure because of the unfortunate things that have happened. And a lot of this, the books that I just showed you are books that you would prepare in the good times. But let me tell you how much fun it's been as I try to teach people how to talk to investors about why they're now in a down round, or why, their value has dropped, or why they haven't reached their KPIs, again, investors are more understanding than you think if you have a good explanation. And so we craft good explanations to help people get through this crypto winter. So anyway, thank you, everybody. I think that's it. Sorry about that.
Thank you very much. Once again, let's give a big round of applause for Miss Erica Evers-Dottir with the topic of ways for startups and young companies to become investors ready. So next we have a panel discussion with the topic of true digital ownership with DeFi and NFTs. So let's welcome first our moderator, Karim Rafa, blockchain and crypto advisory at KPMG. With our panelists, Krinza Momin, business relations engineer at ANKR, Dr. Zhu Feida, associate professor, School of Information System, SMU, Stephen Brown, co-founder of SORS, Goh Seng Han, CEO, Trigger Asset Management and founding board member of Association Blockchain Asia, ABA, and Kishore M, founder and CEO at Crowdfunding Junction. Once again, ladies and gentlemen, a big round of applause to our panelists and our moderators.
Indeed they are. Thank you. Very lucky to be on this panel. Thank you all for joining here and hearing what we have to say. So before we get started, I guess that was a great little introduction here, but can we get a bit more of a one-two word from everyone here as to what they've been working on in more recent days? I can start, if that's okay. So my name is Karim Rafa. Like was mentioned, I lead blockchain and crypto advisory at KPMG, traditionally focused more on the banking and TradFi side and how we can pivot that into the DeFi space.
Sure. So I'm Krinza. I work with this protocol called Anchor. We provide Web3 decentralized Web3 infrastructure for companies, enterprises, and we provide connections to the 50 plus blockchain networks. And then I'm also part of a developer DAO, which exists to kind of help developers get on board into this space, learn and just vibe together and build and ship together.
Hi, my name is Efei Rajum. I'm a professor at Singapore Management University. So I mainly work with blockchain, privacy-aware computation, Web3 in general, and I'm also the co-PI of Singapore Blockchain Innovation Platform. Okay, thank you.
Hello, good afternoon, everybody. My name is Stephen Brown, co-founder of Soars. Very briefly, Soars is a company based between Ireland and Hong Kong. We've 2 licensed businesses in Ireland and 1 in Germany, focused on custody, security tokens, and DeFi. I'm happy to be here.
Good afternoon, everyone. My name is Han. I'm the CEO of Trigger Asset Management. So we are a venture capital fund. And traditionally, I'm from a lot of traditional businesses, such as real estate. But the last 10 years, I've ventured into the tech space. And I'm also one of the co-founders for the Association Blockchain Asia. Thank you.
Good afternoon, everyone. My name is Kishore. We run a DAO VC, and we also help companies launch and sell out their NFTs.
Fantastic. Quite the intro and quite the big panel. I just realized there's like 5 of you here, 6 of us up here. Now, there's 2 VCs, if I got that right. What I'd like to do first is to dive into, I guess, true ownership of stake or security in that sense. How do you invest in a company that's fully decentralized? What does that token mean, and how do you, I guess, address ownership from a legal perspective when you're dealing with tokens or tokenized equities? By all means, whoever's first. You can take it in order.
Yeah, I think at this point, I think the ground should be at a level where we understand what ownership is and what kind of resources we are trying to control, right? Because we are talking about 2 different things. First is DeFi, and then the second thing is NFTs, right? So when we talk about DeFi particularly, the kind of assets that we are trying to control is basically fungible tokens. That means cryptocurrencies, that means stable coins, right? And then on the other hand, when we talk about NFTs, it's basically non-fungible tokens. That means just digital assets, NFTs, art, collectibles, right? And with all of those, I think irrespective of whether it's fungible, non-fungible, one thing that differentiates between both of these is basically how we interact with non-fungible tokens versus fungible tokens, right? In terms of the control, in terms of the digital ownership, right? So if I am holding a particular asset, which is in a sense where we are talking about DeFi, right? The ownership and control comes in a sense of governance, comes in a sense of having an asset which will give me a power to vote in a particular thing. But in terms of NFTs, I think the power dynamic shift in a way where we're talking about just digital assets and me having control over the buying of it, the selling of it, and the transfers of it, right? So I think that's the ground that I wanted to set at this point, and I think I love for the other panelists to have a discussion over how VCs invest in both of these fronts. So if anyone wants to take over that.
By all means, gents.
I didn't really get the question. It's kind of hard to hear, but I mean, I suppose NFT. My perception is that for VCs, selling NFTs to funds and stuff like that is really an uphill battle. Last year, I came across a project that was creating, 20,000 tickets to some event as NFTs, and their proposition was, oh, well, they're NFTs, the event has to be good. We're going to sell 2,000 to this crypto fund, and I was just like, that's not going to happen. Like, a crypto fund is not going to buy 2,000 tickets just because they're NFTs. So I think the NFT, like with all things in crypto, whether it's a utility token or security token, is just a representation of something that's, creating value. So no matter what you call it, the underlying, whatever it might be, business, community, has to be, has to have value and has to be generating revenue, or doing something on the value chain. So it doesn't really matter what you call it, is my opinion.
I mean, fundamentally, I think it's the legal framework that's kind of missing there, right? I mean, you can create a token or an NFT for just about anything. The first thing you want to consider is there value in the underlying technology, and does it make sense? So tickets, in that sense, why do you need a decentralized system? Are you dealing with multiple parties? Is that there independence risk there? And the second is, why not just use a centralized system? I'm curious from the VCs, though, on this panel, how you guys deal with investing in token structures.
Maybe I'll take this question. So as a VC, we are more focused on fungible tokens rather than non-fungible. The reason being is there's a lot more metrics available. There's a lot more due diligence that happens on the fungible token side. For example, we can actually get a legal opinion for a fungible token. We can actually get to know whether there's any VC backing them, any launchpad backing them, who are the market makers. So there are a lot more checkpoints for us. Whereas for a non-fungible token, we do it as long as there's a fungible token attached to it. For example, I will never buy, let's say, for example, Pudgy Penguin as an NFT, but I'll buy the ERC20 token that represents the NFT pool. So at any point in time, as a VC, I can just sell the tokens, because trying to sell an NFT is very illiquid from a VC standpoint.
Okay, fair enough. And how would you translate that into the future, I guess, of NFTs and DeFi, and that these are evolving into more of securities to some extent, where the underlying asset is no longer just a JPEG, right? It's a real-life asset.
I'll take the question. So I come from the traditional space in fund management and private equity, venture capital. And traditionally we would deal with fiat currency. So now in the digital space, I think there's a lot of interest, even with traditional businesses, to come into that space. I think just taking a page off what I have done for the last 20 years in real estate, if you look at real estate, how that has been sliced and diced. So today, a lot of people look at REITs, right? So REITs is really just a form of tokenization, right? But we're not referring to them as digital assets. But the fact is that you can actually buy shares of real estate and generate yield from there. So fundamentally, there really isn't much difference, but the mode and the medium has changed. And obviously, the regulations that surrounds how all these tokens are being managed and how they are being custodized, that is important. And so there has been many companies out there in the Web3 space, even in the custodian space, that is improving to get that part right. So I would say in the old money space, there's a lot of people trying to get in to the Web3 space, but I think a lot of confidence needs to be built in the infrastructure that allows them to have some certainty in the liquidity of being able to buy and sell their investments.
I mean, we come from the blockchain space. Everything is quite fast-paced or quickly evolving, right? It's a bit sad to see how long it takes for traditional infrastructure to catch up. Like you mentioned, I mean, REITs are a great example of what is essentially a fractionable investment in real estate. Adding that tokenization layer on top gives you access to maybe one particular asset or an NFT, per se, for one particular asset. But we're stuck with that legal framework, and Harn, for you again, where do you think it leaves the traditional infrastructure, the traditional bookkeeping system? How long is it going to take for that to catch up?
Well, I'll just add something here. So, one of the things, if you take an example of something, like a project like Centrifuge, which some people might know, or Defactor, also, which are creating liquidity pools for invoices, for 60-day receivables, things like that, where the collateral is turned into an NFT, put into a liquidity pool, that people are funding the liquidity pool, and the collateral is supposed to sit there in the event that the repayment of the principal is not paid back, is liquidated. But the liquidation is not happening on chain, and there's no way for a real world asset to be represented as an NFT and then to be liquidated on chain. So that's fair enough. The crypto industry just isn't there yet. So I think there's hurdles like that, and to Say's point about real estate, yes, you can tokenize deeds to houses and apartment blocks and stuff like that, but if the government, in whatever country, there's usually a land registry or things like that, if they're not playing with the same type of technology, in a sense, it's kind of pointless, because you're doing all this on-chain process, and then when you actually try to formalize it, you're just running into paperwork and laws that have been there in some cases for 200 or 300 years. So I think the kind of tokenization and NFTization of stuff is fine, but when it hits the real world and things like bookkeeping, we still have a long way to go before statutory bodies, government bodies start recognizing these type of digital innovations.
Yeah, so in fact, I think they cause both the technology and the law to work together. For example, I'm currently teaching blockchain and governance in SMU Law School, and there are lots of governance issues that are just emerging. For example, what's the governance structure of those DAOs? And so currently, for example, we're looking at MakerDAO as an example because it has a long history of all the governance records and so the data. And we're looking into exactly how people vote and how does the interesting things come into play. And people often in blockchain space say, oh, code is the law. But actually, I'd like to add the second part is law is code. Here, code is COLD, right? So when the problem actually happens, you will need the law to actually step in. So I think, yeah, I agree. There is a long way to go, and actually for people to realize what's